the trend I think has been ugly, and yesterday just got brutal.
Yeah.
So it was brutal, it was absolutely crazy, and the market, in a sense, yesterday caved in largely because of technical factors and because of compulsions. There was nothing which could be called as a news factor or anything on the macro horizon or anything on the local horizon. The breadth of the market completely dented, and the tone and the tonality of the market in a sense was completely damaged. So let's establish that how brutal the month of March has been, because for me that in a sense is a clear indication of where we stand. The month of March and the world now looks like a very different place. Let's look at that data, please. What's been okay, we don't have that data in the month of March. Okay, I've been told the data is coming because I don't remember data, so I'm going to just wait for the data to come. But what I know is that in the month, all right, never mind. So it's been just one of those phases of the market where I guess the selling has been very very exaggerated.
Yeah, and I was just going through the data that actually one of the colleagues had sent, and it did say that it's one of the worst, March that we have seen at least so far, if you go by the trajectory that we have at our hands for the moment, because this is the biggest single session fall that we had seen in small cap in the last couple of years. And even if you look at the mid cap index, it's the biggest intraday fall that we have seen in the last couple of years. So Nifty small cap index is down 10.5% so far in the month of March, and that's the biggest monthly decline since February 2022. And the mid cap index down 5% again since June 2022. This is the biggest single month decline we have seen so far. And remember, we are not even halfway through March. We're just sitting at 14th March right now. So let's see how it pans out the rest of the month as well. But talking about the broader markets, yes, they were completely in a free fall yesterday. It's the biggest intraday fall that I talked about in the last couple of years, and a lot of factors at play. Call it the regulators calling the froth in the market, the fact that the March seasonality is coming to play, or the fact that large cap valuations now look much more comfortable versus the mid-cap valuation, and that FIIs are probably putting money back into the FIIs. There is this pressure. But Nikunj, what should be the strategy going forward in the broader markets? Do you think there might be, the large part of the price correction is already through, the large part of supply correction is already through, and maybe we'll see a bottom soon?
So Nisha, let's understand what triggered the market sell-off. The market sell-off was triggered largely because of the valuation froth and excesses which got created purely in terms of participation. The regulator in a sense came out and they spoke about risk management, and they generally raised a red flag in terms of if this entire mania in small and mid cap stocks and especially SME stocks continues, it could really lead to a financial problem. That in a sense was a polite reminder that equity as an asset class has underlying risk in it. Fundamentally, nothing has changed. The macro position has not changed, but excesses in the market, I think, are getting weeded out. If you look at individual stocks, of course, if stocks are down 30 to 35%, it in a sense will be damaging, and it in a sense will have an impact both in terms of portfolio performance and individual NAVs. I think the way forward in the near term can be divided into two parts. One, not all small cap stocks in this market, they appear cheap, but not every small and mid cap stock is now expensive. There are individual companies in the small and the mid cap space where I expect that in next couple of days bottom fishing actually will start. Markets are showing total signs of capitulation. Everything has come down, everything went up like a rising tide, things have come down, but typically the bottom formation will start, whereas 60-70% of the stocks will remain where they are and they'll stop falling, and 15-20% of the stocks where high risk appetite or high risk money, I think, will start coming back. So in general, if I would have said, which is a line which we've been advocating, be lazy in large cap, be choosy in mid cap, and don't buy the mania in small cap stocks. But I think now the new line I would like to say is that stay in large cap, still be choosy in mid cap, and perhaps by the end of this week or early next week, you'll have, if you're a high risk investor, you need to revisit some of the small cap stocks. So the Indian bull market is not over. All bull markets, they go through this periodic churn. It's a very savage bull market correction. It'll hit you. It will compel you. It'll force you to rethink about your portfolio. And before you really realize it, it'll actually get over. The only difference is that we have seen a rising tide phenomenon. Everything has gone up. the tide is receded, volatility will come back, excesses will come out, the weak players will be out. It's like a tree, when you shake it, the weak fruits, they always fall. I think that is what has happened. But the tree is still blossoming, the season is still right, and I guess that is the way it is.
If you like this video, then like, share and subscribe to ET Now.